Greetings to all my dear students. At the outset, thank you very much for watching this particular video. Friends, this particular video is meant exclusively for the first year BAF students, semester 1. And I will be speaking about the subject Introduction to Financial Management Part 1. I will be soon starting a batch for online coaching for this particular subject. Well, we definitely need to know what is there in this particular subject, and this particular clipping will give you a brief about what is financial management and what our syllabus is all about. Meanwhile, for those interested to join for my online coaching, can please contact me in my number 99670 This number is also mentioned in my page, wherein you can find it and call me to take it ahead for the online coaching. Well, financial management is huge in itself, which includes working capital management, it includes capital structure designing, it includes receivables management, it includes capital restructuring, it includes leverages. There are so many topics inside financial management. It includes ratio analysis. While financial management is an ocean in itself, we have selected 4 chapters in our syllabus apart from the introduction to FM chapter. The 4 chapters are concepts in valuation, leverages, cost of capital, types of financing. Let me in brief, in short, in this particular video, tell you as to what our syllabus is all about. Let us first speak about the chapter leverages. Well, we can mainly speak about fixed cost and variable cost. Fixed cost in the sense, those expenses which will remain fixed, those expenses which will remain same irrespective of how much ever you sell. So even if the sales is going to increase, expense will remain same. Even if there is a decline in sales, fixed cost will remain same. Let's put an example, factory rent. Let's say the factory rent is rupees 1 lakh per month. Now this 1 lakh is going to remain same irrespective of how much ever quantity you sell. Which means with increase in sales, you will be easily able to meet your fixed expenses. However, for any market reasons, if there is a decline in sales, agar kal sales kam ho gaya, if there is a decline in sales, this rent, this fixed cost is going to remain same 1 lakh. So now the question arises is the ability of the firm to meet the fixed expenses. Therefore, the more the fixed expenses, there is a risk that in case of decline in sales, the company may not be able to, or the company will find it difficult to meet the fixed cost. Therefore, to be very precise, the risk arising out of high fixed cost is called as operating leverage. Similarly, we have a concept called as financial leverage in our syllabus, which speaks about high risk arising out of high interest on loans. Broadly, when you design the capital structure, we can have own funds and loan funds. So let's say out of 100 rupees capital, a firm may have 60 rupees own funds, equity capital, 40 rupees loan fund, debt. Other way around, it can have 40 rupees own fund and 60 rupees loan funds. This is in short designing capital structure in which we will decide the proportion of own funds, loan funds. Kitna loan hona chahiye, kitna own funds hona chahiye. Remember that when the loan component increases, you need to pay interest, and this interest amount you have to pay even if the income declines for some reason. So the risk here is if at all the loan component is higher in the capital structure, it may so happen that there is a decline in sales for some market reasons, due to which there could be a decline in the earnings, EBIT, earnings before interest and tax. So if there is a decline in earnings, now the question comes, this interest is going to remain same. Therefore, this speaks about the ability of a company to repay back its loan along with interest. Therefore, higher the loan component, in case of decline in earnings, you may find it difficult to meet the interest expenses. Therefore, students, the risk involved or the risk which arises due to high interest on loans, we can call it as financial leverage. And when you combine the total leverage, we can call it as combined leverage. What I spoke right now is just a gist about what is operating leverage and what is financial leverage. Once if you join with us, we will learn together the concepts in detail. What is operating leverage, what are fixed costs, what are variable costs, how do you distinguish between operating leverage and financial leverage, and so on. We will solve a lot many numericals to learn this particular chapter. Next, in syllabus, we have a topic called as cost of capital. These two topics are a bit related, cost of capital and types of financing. A company will need to raise funds. Broadly speaking, it can be short-term funds and long-term funds. In cost of capital, while calculating cost of capital, we mainly refer to the long-term funds, which includes the equity capital, preference capital, debentures, bank loans, retained earnings. In this chapter, types of financing, this is a theory chapter in which we will be learning the features, the merits and the demerits of every source of fund, both long-term and short-term. So equity, uska advantages, disadvantages, features. Preference, uska features, advantages, disadvantages. Debentures, features, advantages, disadvantages. Similarly, we will learn about short-term funds, the different sources, advantages, disadvantages. So this is a total theory chapter in which we will learn about each source of fund, their advantages, their disadvantages and their features. Well, whenever we raise funds, it is going to come with cost. So, in this chapter of cost of capital, we will be learning to calculate cost of equity capital, cost of preference capital, cost of debentures. Inside preference capital, inside debentures, you have got different types, redeemable, irredeemable. So, we will calculate cost of each source of capital under different conditions given. Further, in cost of capital, we will be also learning a concept called as weighted average cost of capital, in which we will calculate the overall cost of capital, which considers all long-term sources of funds. So this is a numerical chapter in which first we will calculate individually cost of each source of fund, followed by the overall cost of capital, which is also called as weighted average cost of capital. Further, in our syllabus, we have a chapter called as concepts in valuation. And this chapter, concepts in valuation, is based on a concept called as time value of money. Friends, we all know that value of money is not going to remain same over a period of time. Think for yourself, what was 500 rupees 10 years before? What is 500 rupees today? And what will be the value of 500 rupees 10 years down the line? 10 साल पहले 500 रुपए रख के हम लोग बहुत कुछ खरीद सकते थे. Are you able to buy the same quantity today? No. Will you be able to buy the same quantity 10 years down the line with 500 rupiah? No. Which means although the 500 figure remains the same, the value of 500 is not the same. So you find that the purchasing power is falling down year on year. Therefore, 10 साल पहले 500 रुपए में बहुत कुछ खरीद सकता था. Today I am not able to buy that quantity in the same 500 rupees. So we all agree to the fact that value of money is decreasing year on year. So when you invest 1 lakh rupees today, we are definitely interested to know ये 1 lakh rupees जो आज इन्वेस्ट कर रहे हैं, इसका वैल्यू 10 साल के बाद कितना होगा? If I am investing 1 lakh rupees today, how much will I get after 10 years? So when I say that you are investing 1 lakh rupees today, you know the present value. Today in the sense, the present value. So today's value is 1 lakh. What will be the value of this 1 lakh, let's say after 10 years? So in this chapter, we will be learning two very important concepts, everybody. The first is, when you know the present value, आपको find करना है future value कितना होगा. In that case, we will use something called as compounding factors. We will use a concept called as compounding factor. So if I invest 1 lakh every year from now for the next 10 years, how much would I have at the end of 10 years? Apart from scoring marks, These are very interesting concepts which we can apply for ourselves in our regular life. Let's say you know that 5 years down the line, a machine is going to give you 1 lakh rupees cash flow. So 5 years down the line bolenge to, you know the future value. Here, the future value is 5 lakhs, we know it. So 5 साल के बाद जो 5 lakhs है, what is today's value? Today's value in the sense present value. So when you know the future value, but you have to find today's value. In this case, we use something called as discounting factor. So in this chapter, to be very precise, when you know the present day value and you have to find the future value, we use a concept called as compounding factor. And when you know the future value, you need to find today's present value, we use a concept called as discounting factors. Mind well, these are very, very interesting topics. Once you solve sums, once you start solving sums, apart from marks keeping aside, there is a lot of value addition, and all these concepts are something which we can use it for our own regular life. People, the first chapter, Introduction to Financial Management, gives us a brief about what is financial management, what is the scope of this particular subject, what all topics are included inside financial management. It gives an insight to every fresher, to every beginner as to what is financial management. To sum up, as I started that financial management is a huge subject in itself, this particular small course is designed in such a way that we learn certain concepts which are going to take us ahead in our upcoming semesters and in the future courses too. There are two very important things when we learn. One is we learn for the examination, we get marks. Second, very, very important approach is we learn the concept, we add value to ourselves, we retain the learning with us and put it to application whenever required in future. This can be put to application in your own upcoming semesters, in your further courses, and even in your work life ahead. So, it is very, very important that at the first semester level, you make all your basic concepts very, very clear. And you making these concepts clear at the first semester stage is going to help us a lot when we go towards our completion of this course and when we do the PG course and even when you start applying these things in your work life. Therefore, a very, very important point here is conceptual learning, value addition to yourself. Friends, in all our classes, we will have two approaches. One is solving for examination and getting marks. Second, learning the subject in such a way that we retain the knowledge and we put it to use whenever it comes in future. Therefore, the learning is not meant only for examination. Every session, every online session will be meant for value addition. So students, I hope to see you all soon. Do contact me in my contact number. We will soon start the lectures, online classes. Those who are interested may call me please. A very, very important point to note is that earlier we start, the more number of sums we can solve. Yes, there are crash courses where students do join, but in crash courses, the approach is only for examination purpose, wherein you learn for that particular examination and you pass it. But we joining it early means we will have at least 3 lectures every week of 2 hours and we will get to solve many sums. Remember, 2 very important points. We will be learning the subject from examination point of view in the sense we will put equal emphasis on multiple choice questions type, and if at all you will have to write a full length paper, we will give the same emphasis, we will give you the same practice for a full length paper too. So here we will prepare all our students for both multiple choice questions as well as full length papers. You will have frequent practice tests, you will have assignments in which you will have to solve sums, so that tomorrow if you have to attempt a full length 75 marks paper, you will be habituated to the same. With that, let me wind up with this particular video. Friends, thank you very much for watching this, and do like and do share this particular video to your friends also so that everybody gets benefited. Thank you very much. Bye-bye.